you gonna do, fiat dollar? Or CryptoBullGod and his crypto maniacs and the entire cryptocurrency market run wild on you.
Welcome in. I am the CryptoBullGod, and this is the recorded on Monday, airing on Monday, March 28th. I had to actually look at my calendar for that one. 2022 CryptoBullGod podcast. You can find me on the Twitterverse. You can find me on YouTube. Hey. You can find me on Tradingview and Instagram at CryptoBullGod. So you'll notice I really switched up the format for today. So for once, I'm doing a video podcast. Don't expect this regularly, at least for the time being. But listening to the audience, listening to you, the viewer, you appreciate it. You know, if I could come on here and do a video every now and then. So switching it up today to do video. And yes, CryptoBullGoddess, I am in white and black as typically normal. Although I have gone to look into it, try to change up the repertoire a little bit. You know, CBG he focuses on other things, and I do feel like I have a sense of style. I do feel like I have a good sense of style when I want to dress up and go out, but I don't really focus on buying myself a lot of clothing. So looking in the closet, it does seem I have a lot of white and black. So trying my best to kind of change up the colors and get some additional shirts. But really excited to come to you today and just kind of talk about the markets because things are really starting to heat up, as you can tell. By the way, before we get into everything really quick, just make sure to subscribe to the channel, hit the little bell icon, drop a like, and leave a comment because, as always, you know that I appreciate engaging with you. So this week, before we get into crypto, I just want to say, this week has gotten off to an awesome start. It really has. It's been I've been a little stressed lately. I have a lot of things going on between at work and then outside of work. So just a lot of different stressors. Some things I'll hit on in weeks to come. But it's gotten off to a great start. I actually went out golfing for the second week in a row yesterday. For you, those who follow me on Twitter, you did see the tweets I put out there that I was going golfing. So the crypto brother and I went out golfing, and it was a great time. I am not a professional golfer. I'm very much an amateur. But Crypto Brother, correct me if I'm wrong. For being an amateur, you got to hold up so Crypto Bringer actually believes this now. Come on, vouch for me. I wasn't that bad, really. So it's funny, like, there's a lot of funny things I can think of while we were golfing. But the one thing I'll bring up real quick is when we were keeping the scorecard. And, you know, basically the way I decided to attack the scorecard was I only decided to write down the hole counts, the hole counts. See, this is how much I know about golf. I'm just going to leave this in here. I'm not going to edit this. On every hole, okay, I only wrote the score down when the hole went well for either of us. When it didn't go well, I tried to think of something creative to write down. So, like, maybe hole 9 was cerveza, implying that, like, the hole didn't go well because we were about 2 IPAs in. So, like, you know, you just got to chalk it up to that. Or if the hole went really bad, I know I wrote this down for one of mine. If the hole went really bad, but I had, like, a really good putt, I wrote down on the scorecard, really good putt. Like, I mean, it's something positive to take away from it. So yeah, Sunday, you know, the week started off perfect. My friend and I, Crypto Brother, we've decided to go golfing once a week for the foreseeable future here. So we're actually golfing again next Sunday at a different location down here in South Florida. So very, very much looking forward to it. And then today, you know, nothing's going to top what happened to me today. You know what it's like when someone stops by you completely unexpectedly, who you haven't seen in a long time. So I saw a certain someone today, very unexpectedly, very much needed, and it was great to see that person. So very much a surprise. So nothing will get better. Nothing will top that this week. So that happened, and then the crypto markets have been picking up, and this is really where I want to go with today's podcast. So, and you can kind of see me looking off to the left or the right here because I got a little script that I put up here. This is why I like doing audio, right? Because I'm not in front of the camera and you guys can't see me. But by the way, drink choice today for all crypto bull gods. We are doing a lime bubbly. That is the drink of choice today. So one of the things that I've really been, you'll find that if you've been following me a lot on Twitter or on YouTube, I put out consistent messaging. First off, I feel like I'm very consistent in what it is that I'm communicating. And you'll also find that there are many key points that I continually hammer home on, right? So if you watched my last TA video, constantly I've spoken about two things. One, the ascending triangle, the huge ascending triangle that's been on the weekly view for Bitcoin for a while now that I've been talking about. So I've been relentlessly talking about that. The other point I drive home is something that is statistically likely, right? I don't guarantee anything on this channel. I think you should run the other way if anybody tells you that something is guaranteed or something is certain to happen. It's not worth your time. Just exercise some common sense. Probably this person is trying to hype up their channel or their content so they can gain a subscriber or following base. That's something I will never do. But the other key point that I've been hitting on is you interact with a key area. Let's actually take a look. All right, let's take a look. I have you up on the video right now. So as we interact, right, if you watched my TA video, this area right up in this 66 to 68,000 area, it's now been hit twice within the larger ascending triangle formation, right? So when we come up, now I gotta say, I put this bars pattern on here a couple weeks ago. It's actually been playing out pretty nice so far. But I'm anticipating over the next couple weeks, whether it's in April or whether it's in May, whatever month, okay, timing is irrelevant. It's more relevant to look at the price action and ascertain from that the most likely direction, right? I think one of the things that people got so caught up on last year, and I know I threw my hat in the ring when it came to this, was speaking about timing, right? And because things didn't perfectly time out the way a lot of people thought, all of a sudden, and it's the uneducated people. It's the people that are emotional and don't have the educational background. But, and if that's you, hey, just own it. Own it if it's you. Okay, I've been there. But people get salty. They don't know what's going on. Things don't happen when they think it's going to happen. And so I've kind of backed off of speaking about timing. Let's just actually pay attention to the price action and what's telling us. Well, in this case, what it's telling us is hitting a ceiling, and we're about to hit a ceiling for the third time. Now, once this third retest occurs around $66,000 to $69,000, I don't expect the ceiling to provide much more resistance. In fact, I expect fairly quickly, don't pay attention to this bars pattern for a second. I expect the ceiling to kind of cave in and not provide much resistance. I expect us to kind of get up here, potentially back test this area, which would actually be very healthy, very, very healthy, form support right in this region in here. I can just keep doing this and can get messier and messier. And then continue upwards, okay? So that's what I'm fully anticipating. But, and this is one of the things that I actually spoke to with CryptoBringer on the CryptoBroz podcast. By the way, new episode dropping today for the CryptoBroz podcast. If you have not checked it out, you need to check it out. I'm providing the perspective of somebody who's been in the market since late 2017, okay? And my brother is coming from this, and you should be able to relate to my brother because my brother is coming at this from the line of sight of somebody who is newer into the market, okay? He admittedly can get a little emotional, okay, talking about those shit coins. And he provides not only a humorous element to the podcast. Not only does my brother have an awesome sense of humor, but he also, quite frankly, provides the perfect perspective for somebody who is sitting in your shoes more than likely, somebody who is newer to the market. So you kind of have both perspectives coming together to result to result in this beautiful picture within this podcast. So you need to check out the CryptoBroz podcast. I'll leave a link. But the thing we were talking about, or what I was mentioning to him, is, if you actually go back, you can spot check me on this. By the way, I have a sitting standing desk. Check this out. You see this? Okay, so the camera's actually positioned on my monitor. This is the other thing I want to do. At some point this year, I don't know when it's going to happen, but I need to get a better setup, a little bit more of a professional setup, and have a little bit more, not only rigor and regularity to the content that I put out there, but some more professional hardware that'll make the experience a little bit more better for the end user, which is you, the audience. By the way, if you have not liked the video, drop a comment, subscribe to the channel, and hit the bell icon. That's the only sound effects I have for this YouTube channel. But anyway, if you go back to my earlier content and you also watch the CryptoBroz podcast, consistent messaging. Again, it's all about consistent messaging. I've spoken to the fact that there are these times within the cycles, the crypto cycles, where things become very boring. They become very stale. What other synonym can I use? And there's just sideways chop. And what actually is happening is there's accumulation going on. There's either distribution, where the smart money is selling and the stupid money is buying, or there's accumulation, which is what's been going on. And the accumulation is where the dumb retail money, the stupid money, is selling out of frustration, and this shit should have... Damn it! This stuff should have topped in December. Here we are in March, and Bitcoin's still at $38,000 or $40,000. Ah, God! H-bar's corrected 50%. Ah! Okay, and they end up just selling because they don't know how to read a chart, quite frankly, just keeping things real. And the smart money, the whales, they're gobbling that stuff up, and this shit's just going sideways, right? This is what weeds people out. This is one of the biggest reasons that most people in this market are not successful. These are things that I've hit on so many times on this podcast, and yet I can hit on it, I can talk about it, but it's a different thing to actually see it lived out in real life, right? You could sit there as an investor, not a get-rich-quick scheme, but an investor, if you really are an investor, and you can face moments during this cycle where you're telling yourself one thing a couple months ago, but then when you actually go through the thing that you've told yourself, prepare yourself for this, there could be periods where we have like a 50% correction in certain projects, or 60 or 70% correction. We're still in a bull market. Like, I know this is going to happen. We're still going to be in a bull market, macro perspective, but on a more granular level, on a lower time frame, what's happening is we've gotten higher in price. This is the best way to explain it in layman's terms. We've kind of overshot where we should be. Things need to kind of reset and level out. But in the grand scheme of things, we're still in a macro bull market. I know this. I know this is going to happen. But then when you actually look at your investment portfolio and you see the value of your account dipping from, let's say, $50,000 down to $30,000, down to $25,000, down to $20,000, you're like, this dude is all muscles. He has no brain. By the way, if it would help, fun fact, I've never shared this before. Fun fact. Would this make me look more intelligent? Do you think I would get more subscribers to my channel if I wore my glasses? I mean, it does make me look a little bit more intellectual, right? Looks can be very deceiving, Don't judge a book by its cover. But do you think that I could get more subscribers if I put some thumbnails like this? Do you think I could get more subscribers? So drop a comment. Hit the like button if you appreciate my quirky sense of humor. But I really would appreciate your honest thoughts on this, because I can do this. I can wear these glasses. I'm not crazy about how they look on me. But you know what? If it's going to get my subscribers on YouTube up from I think I'm at 1933. If I can go from 1,933 subscribers to 193,000 subscribers, shit, I'll do it. I'll do it all day, every day. So that's what she said. So Cha-ching. Hey, sorry. I know. My humor is really bad. So anyway, these are the things that I talk about. I find myself funny. Maybe other people don't find me funny. But these are the things I talk about. But when you actually live it out and you're experiencing it, it's a whole different story. It's a whole different ballgame. These are things that I can relate to. I do not come to you today. I do not come to you. I've never created content with the perspective that I know everything. I'm telling you exactly what's going to happen, and I'm never going to make any mistakes. I've made a shit ton of mistakes, okay? And it actually, I think, would be advantageous to the viewer, to you, if maybe I created an entire episode at some point kind of talking about, in generalities, some of the mistakes I've made and how I've benefited and learned from it. You're going to do the same thing. We are now entering, I feel convicted about this, okay? And if you don't understand why I feel this way, you need to watch some of my recent TA videos. I mean, I tell you why based on historical data and emerging price data, factually, why I feel the way that I feel. It's based on data. It's not based on my emotion, okay? I feel convicted based on the data, again, actuary, data scientist, logical mathematician, that the most probabilistic direction for price, as I always say, is up, and it's going up a lot higher. And we're actually entering the true last euphoric leg of this crypto cycle, okay? And having gone through a full cycle almost now, it's not done yet, I have learned so much, and it has benefited me so much. And going through this, the mistakes that you have made, it's going to benefit you tremendously moving forward. Use it as an opportunity. You know, I tweeted something out recently. Let me actually scroll to this since I'm doing video. This was a tweet that I put out today earlier this morning, that setbacks are one of the most beautiful things in life. It makes you more hungry, and it makes victory that much more glorious and sweeter. And it is so the truth. It is so the truth. I think it's actually one of the biggest problems with society today. I tweeted something out about this. You know, society is turning more into giving participation awards out than actually giving first, second, and third place. People win and people lose. It's reality. It's life. You get kicked in the ass sometime. Accept it, learn from it, and grow up. Be responsible, take some ownership. Unfortunately, that's not the way I think society is going. But one of the best things that can happen to you is you even just work hard at something and you think you know what you're doing and you don't succeed at it the first time. You got to pick yourself back up, and you got to learn from that experience, and you got to move forward. That's called growth. It's developing character in yourself. That is something I can absolutely speak to, and I hope you can too. I hope there are things in your own life that you can look at. There's setbacks, but you view it as an opportunity to learn and to grow as a human being. So use this opportunity as you're going through this bull cycle to really learn from it, because what's going to happen is, before you know it, and I told everyone, I will be very quick to acknowledge when I feel confirmed after the market has topped. When I feel really convicted that the market has topped, I joked, but I'm being actually very serious. I will change my name from CryptoBullGod in all capital letters for bull just to lowercase letters, okay? Just take out all caps in bull and put it in lowercase, okay? And what's going to happen is, we are going to go through another massive correction in cryptocurrency. Bitcoin, whether it's 80% or 78%, whatever the percentage is, it's going to correct by that amount. Altcoins are going to correct 90, 95, 99%. It's going to happen. Why do I feel convicted this is going to happen? Because every cycle this has occurred. Until something different happens, history is going to not repeat, but rhyme. It's going to look very similar. So you need to really buckle up and know what you're doing and how you're going to benefit from this last euphoric leg. This is one of the points I wanted to make here, is you need to prepare yourself for the incoming change that is currently occurring within crypto. Again, another point on this channel that I have hammered home on repeatedly, and all I can do as a content creator and as an educator Fun fact about me, I don't know if I shared this about you, or shared this about you. I don't know you. I have no clue who you are. Sorry. Some of you I know. Some of you I don't. Fun fact about myself that I haven't shared is that actually when I was going to school, stay there, you got this. When I was going to school, I was kind of torn between two different career paths. Actually, I think this is in my intro video, so I'm probably repeating myself if you watch my intro video. But basically, I was deciding on whether I wanted to be an actuary, which is what I ended up doing, and it was an awesome choice, or going the teaching route. I did a lot of tutoring. Teaching was always something I enjoyed doing, and thought, if I do it, I don't want to teach at a public school. I want to be a professor at a university, teach some like high-level calculus or statistics classes. So the reason I bring all this up is that I get genuine enjoyment out of helping to educate everyone who will listen. Anyone who finds the content helpful, which, by the way, if you have not, for the love of God, it takes 2 seconds to hit the thumbs up button and drop a comment. Subscribe to the channel, click the bell icon, because YouTube makes it difficult. You got to do everything. You got to do like 4 different things. But I am really trying to help everyone as much as possible. And what I need everyone to do, if you haven't done this already, if you've been subscribed to this channel, then this is something you should have been preparing for already. I need you to really figure out at this point, if you haven't done this already, it's critical. I really mean this. I need you to figure out what your sell strategy is. I need you to figure out how you're going to scale out of your investments. The worst thing you can do is either not think about this or pick a specific price level to sell everything. That the second one is really stupid. The first one is dumb too. No one's going to call the perfect top or perfect bottom in any cycle. So what you need to do is you need to figure out logical price points to just gradually scale out, and then perhaps let a small percentage ride. You have to acknowledge and accept humility and humbleness in this market and realize that Bitcoin is not, or any altcoin is not going to hit a specific price point that you have in your head. It's not. You have to come up, and hopefully logical content creators like myself and others within the space, because it's not just me. There are plenty. I just tweeted about this. Alessio Rastani is an awesome technician who I look to in terms of getting his thoughts and his view on market sentiment, okay, and TA. You have to, just like what I do, you have to have other data points, okay, other people in the space whose opinions that you value, and then you have to use that to ascertain where you're going to kind of sell out or gauge a sellout strategy. Sell 20% here, 20% here, 20% here, whatever approach you want to use. But to gradually scale out, it's very, very, very critical at this point. You need to know the answer to those questions, because things are going to, when things really start to turn up, if you look through history, let's actually take a quick look here, okay? Because again, I'm on video, so I can actually show the chart here. By the way, if you appreciate the fact that I'm doing video today, let me know. I really would appreciate it if you appreciate this format. I can try to do it more often. So let's take a look. Let's take a look at this move back in October of 2020, okay? So very simplistically, what I'm going to do is I'm going to use this date range to see when we opened on this weekly candle. Let's use this weekly candle near the beginning of October. When we open this weekly candlestick, you can see it on my screen here on October 5th of 2020. How long did it take us to get up to this price point right here at the beginning of March 8th of 2021? We hit a high of basically 62,000. So how quickly did it take for us to go from, we opened this candlestick on October, how quickly did it take for us to go from 10,500 to 61,800? Okay, let's take a look. Together, we will go on this journey and count the time frame. 22 bars or 154 days. Now, I'm not good with math, but that's approximately 5 months. 154 days, okay? So what I'm saying is, the reason I'm bringing this up is, in 5 months, Bitcoin did a 6x. Yeah, 6x. Yeah, it did a 6x in 5 months. If we go to an altcoin, we all know the holy crypto trinity of HBAR, One, and Mana. Let's take a look at One because this is the first chart I pulled up. This is insanity. So let's look. This candlestick here on the, I remember this time, on the 4th of January, 2021. I don't know what's going on right now. On the 4th of January, 2021, we opened at 0.004, so about a half a cent, okay? Or that was, that was the low on this candlestick, okay? We then, because remember, Bitcoin is the driver of value. It holds for the moment. The majority of the market cap, well, it's always, even when we go through alt season, it's still going to, even if Ethereum temporarily flips Bitcoin, Bitcoin is the largest coin in the space, okay? So Bitcoin is the driver of value. What it also means is because there's more liquidity in it than the smaller tokens, it's harder to drive up the price. Price appreciations, whether it's sharp increases or sharp declines in the altcoins, because they have a smaller market cap, it's like a tiny little boat in the ocean versus Bitcoin being a big cruise ship. When the big waves come in, okay, the big waves, whether it drives whether the waves drive the boat up or it drives it down, it has more of an impact on a tiny little boat, right? The tiny boat are the altcoins. The cruise ship is Bitcoin. You still feel the waves, but in the tiny boat, it's much more impactful, right? So in this case, what we're saying is not only the rate of appreciation, if you have especially if you have a really good altcoin, is much higher than Bitcoin, but it takes place a lot at a sharper angle. And the declines and inclines are just a lot higher. So meaning, and again, just to go back to the bear cycle that I'm fully anticipating happening after this crypto bull cycle, that's why a lot of altcoins will correct like 99% and Bitcoin will only correct maybe 80% or 78%, whatever the percentage is, okay? So here, what we're going to do is we're going to show just how quickly Harmony One went from less than half a cent all the way up to 23 cents. We'll just use that as an example, okay? So it did like a 46x, more than a 46. It did basically a 50x. So Harmony One did approximately a 50x. Whoop. Whoop, whoop. Harmony One did approximately a 50x in about 11 to 12 bars. So approximately 77 to 84 days. So just over 2 months. So in just over 2 months, this altcoin did a 50x. This is how quickly things move, and that's why you need to know what you're doing. Now, if you didn't know what you were doing with this token, this is a great example. If you didn't know what you were doing with this token, look what happened here. We came all the way up to here, did a 50x. Then we started correcting. We went from 23 cents all the way, I remember this time, all the way down to 4 cents. Now, if you panicked in here at 4 cents, 5, 6, 7 cents, you were like, I'm out of here. Shit's going in a bear market. I'm done. We rode it from 4 cents all the way up to 40 cents. We did another 10x. This is why it's important, in my opinion, in my educated opinion, to know TA. And not to be emotionally invested. And the other thing is, even if you're not good with TA, it's to understand why you're in this market. What's your time horizon for an investment, okay? Are you in this for a get-rich-quick scheme? If so, you will lose. The numbers say so. If you're in it to invest and you're scaling in at logical levels and dollar cost averaging, you will win in the end if you're unemotional and you take that approach. So this is why I can graphically depict to you, now that I'm doing a video podcast, this is why it is very important to know what you're doing, what your scale out approach will be, and not to be emotionally invested. So hopefully you found that very helpful. Now what we're going to get into are probably my two most favorite parts of the entire podcast. We're going to get into the chart of the week and then Twitter questions. Chart of the week. I always do that when I'm on audio, right? It is ticker symbol MASK. It is Mask Networks. Full disclosure, I've gotten into a shorter term swing play. Now, this is why it's important to follow me on Twitter at CryptoBullGod. This is something I have tweeted about. I got in, I'd have to take a look on Coinbase Pro, which I'm not going to do obviously right now, but I'd have to see when I originally got into this position, but I think it was down in here. It was somewhere in the $3 range. Yeah, it was around like $3.50 or something. And we're sitting at $5.58 as of right now. Okay, so we've pulled back a little bit because we're up towards close to $6. The point is, this looks like a rounding bottom, and there's not a lot of resistance. After this $5 area, there's not a lot of resistance between us and about $7.50 and $8. Now, we've had a massive correction. We hit a high of around close to $23, and we went all the way down to around $3.55, okay? So we've had a massive correction in this, just like we had with all the other altcoins. But the formation in this, and let's look at the price indicators. I think I was also looking at a 3-day on this. Yeah, so the MACD is starting to curl up. I thought there was one other view I looked at that I'll look at with you, but real quick. But the point is, this is my chart of the week. I do see this thing popping off towards the $8 range, $7.50 to $8 range pretty quickly here. I think there's the potential for that. I'm not guaranteeing anything, but I think there's the potential for that. And then you can see other areas of resistance I have here around 10, 14, 19, 21, and then the all-time high. The other chart I wanted to point out to you, this is a really cool one. So if you can use different crypto project relativities, you can use it to benefit your position. So as I've told you, I have a longer-term investment back. So most of my crypto position are longer-term holds, advantageous for capital gains purposes, which I'm finding out this year paying my short-term capital gains taxes. I had it calculated, had a really good idea of what I was paying, but still when I looked at the number, I was like, fuck you, government, handing more money over as if I don't pay enough taxes already. So most of my crypto bag is longer-term holds. I'm going to pay a real low tax rate on that, 20%. And then I have another portion of my bag that is just going to be taxed at ordinary tax rates, shorter-term gains, capital gains. And this is where I make smaller position changes like this. This relativity chart is the Mask Sushi chart. This is a step function. And again, I've tweeted about this on Twitter. You can see what's happening here. We wrote it out here, came up. Wrote it down here, came up. Now we've leveled off here. And what I see, and again, I'm explaining this in layman's terms, so this isn't exactly how I analyze it. I'm trying to put things in layman's terms for everybody. But what I see here, very simplistically stated, the RSI is increasing. The MACD is starting to curl up. We flatlined here for a while, and I see this thing shooting up. Now, what does this actually mean? This means that I have an expectation. I have a big expectation that most likely, not guaranteed, but most likely, Mask USD value will appreciate at a greater rate than sushi. Okay, so if you hold sushi, if you don't hold sushi, this still expresses strength when you're looking between the Mask USD and the Sushi USD. I thought this was a really unique chart because I do hold sushi. So yeah, that's my chart of the week. So with that being said, let's get into Twitter questions. Let's go over to Twitter. Let's see what we got here. I just tweeted this out a little bit ago, so I apologize. There probably aren't too many questions here. I've liked the ones that I've seen. Okay, let's get to this one first. It's the Crypto Brother. I'd like to know when H-bar is going to $20. Well, I would say not this cycle. I would say at some point in the future, do I think $20 is a possibility for H-bar? Absolutely. But, again, this actually hits on an earlier point. Again, my investment time horizon and the way I'm looking at it is I'm playing the cycle. So I fully plan Oh, man, I got to tell you what. Never give your number out to car salesmen. This guy is relentless in calling me, and I've even told him I'm not interested anymore. So, what is up with that? What is up with that? Look, by the way, if you're listening to this podcast and you are a salesman of any type, you're in the car dealerships or whatever, someone texts you back and say, no, I'm no longer interested, take it as a freaking hit. I couldn't be more direct. Anyway, let's get back to H-bar hitting $20. One of the things that I didn't really hit on for myself that I wanted to hit on earlier is my investment time horizon is based on this market cycle. I do not. And again, if you value my opinion, take this for what it's worth. I think it's the dumbest thing that you could do if you plan on just holding your crypto forever and you don't plan on selling it. If you're not educated on the market cycles and you don't plan on scaling out as we begin to top, I don't want to say I promise you, okay, but I feel convicted. I feel convicted that you will regret it. It will be a horrible decision, horrendous decision, because I've seen this sort of shit on Twitter where, like, H-bar is a great example. Like, people believe in the technology of H-bar so much that they'll buy at these levels, they'll watch it go up to $2, $3, $4, wherever it goes up to, and you're telling me you're not going to scale out at those levels and you're willing to sit in that thing as it corrects 95+% over a couple years and just sit there on your investment. So let's say, like, hypothetically, you're an H-bar, it goes up to $3. You're telling me as that thing comes down to 15 cents all the way down, you're not going to regret not selling? Go fuck yourself. You're not being authentic or genuine if you don't feel that way. The smartest thing you can do is scale out if you recognize the larger cycles, okay? So went off on a little bit of a tangent because I didn't hit on that earlier. Here's the thing. You can love the technology of something, and it's still okay to sell it if you realize the big picture that everything's going to freaking sell off, all right? In my opinion, it's moronic not to. Like, it's just crazy not to. So anyway, H-bar, I know you're joking around, but H-bar, not $20 this cycle, but we'll see where it hits this cycle, and then we'll go from there. Must take profits at 52. I'm not a short-term, again, as far as Bitcoin or most of my portfolio, I'm not swing trading stuff like that. So thank you for the question, but again, that's not my frame of mind. Must take profits at 52, no. But again, if you're a day trader or you're trying to take shorter term swing profits, maybe. I just haven't looked at it at that level. So the next question, this is actually a really good question. The next question, thank you, Janza Span at Yanchi7. How would a dead cat bounce invalidation play out? So what this means, stated differently, is how could we invalidate the thought process that what we're seeing is just a dead cat bounce? Well, very simple, actually. I don't even need to click to the chart. The way you would invalidate a dead cat bounce is you would continue to see higher highs and higher lows. Again, higher highs and higher lows are what, if you're subscribed to this channel? They are the basic building blocks of a bullish narrative, okay? So, or bullish structure. So if we continue to create higher highs and higher lows and then eventually take out that prior all-time high at 69,000, that would invalidate the dead cat theory. So that I would just keep it very simple. There's other technicians who would say, well, if you hit this point and you hit this Fibonacci retracement level and blah, blah, blah. Just as long as we continue creating higher highs, higher lows, and then eventually break 69, it's invalidated. So very simplistically put. Next question. This is another good one. I remember reading this right before I started recording. Where do you see retail playing its role in this next move up? Currently, obviously, it's flatline. Thank you for your question, Chris_RD_Taylor. Hey, fun fact. When I was golfing, I was using a tailor-made golf ball. It made me think of TaylorMade. It made me think of the wrestler from WCW, and I forget. This is aging me. This is really giving away my age. Forget his name. Anyway, retail's role, they're the ones that are going to create FOMO. They are the ones, actually this podcast segues really well into this. They are the ones who got weeded out. they're the ones who are going to regret selling, or the ones who have been on the sidelines who haven't bought yet. And when they see price going dramatically up in value, when there's a lot of excitement in the market and Bitcoin's at 70, 90, 110,000, they're going to be the ones buying in. They're going to provide the liquidity for the smart money to sell. So retail, think of it this way. The dumb money, okay, retail, most people who are not going to make out well in this market, they're the ones that are going to be buying up at higher prices, okay? And it creates FOMO. It's like a domino effect. It's like a snowball actually going down a hill that's getting larger and larger and larger. And the whales, the smart money, sitting on the sideline like, yeah. And they're just going to be scaling out as the price continues to escalate in value, okay? So that is the way that retail fits into this engine locomotive that will be the last euphoric leg of this crypto bull cycle. So don't be dumb money, be smart money. So I hope you appreciated this week's podcast. If you really appreciated the different format of this, make sure to drop a comment, hit the like button, subscribe to the channel, hit the bell icon. And until next time, spread awareness and carry the education forward. That's what I say on TA videos. No, my friends. You know how we close out this CBG podcast. In closing, please join me in a moment of silence for all of those I attempted on multiple occasions to get into crypto and have remained ignorant. Thank you.